All right, this is a juicy, kind of meaty, kind of controversial topic here. We're going to talk about AMC and AMC stock, and we're going to talk specifically about what the CFO has done, or Adam Aron has done with the CFO, as far as forcing these different APE shares. Right, they're going to be traded under. We're going to be traded under the ticker symbol APE, and the reason that this particular move by AMC or AMC's management really kind of hit me was that I've been spending a lot of time recently thinking about what CFOs do, the value of a CFO, and how a CFO can solve problems. And solve problems through creative solutions that most people don't think of, and it's because they have certain knowledge of the inner workings of the finance, corporate governance, the legal structures, and they know that the environment that they're operating in order to build shareholder value. At the end of the day, one of the most important things that a CFO does is investor relations. Sometimes that investor is the owner. There's one, right? But the CFO has to have a great relationship with that CEO, especially when that CEO is wearing their investor hat, or they're thinking about being an owner. Myself being a CFO by heart or by trade, this move by AMC is nothing short of genius. Now I'll say that I'm doing this video within a few days of this move that they made, and I actually listened to the entire earnings call. I'm so impressed with the CFO has done here. I had to do a video about it. Number one, I want to explain it because I know there's a lot of people that are thinking about AMC. They're kind of confused. They're not sure what to do. I see the stock price going up and down all over the place. And I think that's because the CFO is trying to solve some big problems here, but I don't think that people really understand what the problem is and what they might be doing here to solve this problem. One thing I want to say too is that I'm not sure exactly what they're doing. I don't know exactly what their plan is, and I think that's by design because they can't show all their hand here, but I think it is a little bit like a poker game. And when I go back to wearing my CFO hat, which is easy for me to do, being a CFO, is the CFO is solving a problem. And the problem is that they're trying to take care of their shareholders, right? Again, we all know that corporate officers, their fiduciary duty is to their shareholders. Adam Aron's duty is to the shareholders. And if you're a shareholder, I'm talking to you directly. The CFO works also right next to the CEO and has that direct fiduciary duty to the stockholders and has to think of any way possible to add shareholder value. And I'm going to tell you from my perspective what I see going on at this company and the shareholder value. And this is my opinion. It's not investment advice or anything like that. But I can tell you what I'm seeing, and from sitting in a CFO chair, I can tell you what I think he's doing and how just smart I think it is. So basically, if you need to know more about AMC stock and how it all works and stuff, that's beyond the scope of this video. But assuming that you understand that AMC has stock that is traded on the New York Stock Exchange, it's a publicly traded company, et cetera, et cetera. The problem that they've been having recently, or really alleged problems, is that there are synthetic shares that are trading, okay? And for all purposes, it is basically the way the markets are set up is that there are intermediaries, and they're called broker dealers. And when you go buy shares of AMC, you basically place an order with a broker, okay? You're not like buying them directly from Adam Aron or the people at AMC, right? You're buying them from a broker. Now that broker has to consummate that transaction for you, right? And then they deliver the shares to you. Well, what has been alleged, or what people have been suspicious of, is that these broker dealers are not transferring actual shares. In other words, they're creating synthetic shares, and there's a lot of option contracts going on. So there's a lot of it's just buy options, sell options, a lot of very complicated financial products that are out there related to AMC stock. There's a lot of short selling going on, et cetera, et cetera. So let's just say there's a lot of kind of moving parts and pieces, and some of it kind of seems a little shady. Again, I'm not making any accusations, I don't know for sure, but it certainly does seem sort of suspicious. And it hurts shareholder value because if you go back to real fundamentals, if I go back to my valuation expert hat, right, it comes down to what are the free cash flows that this company is producing per share, right? So if there's 1 million shares, and this is not AMC numbers, these are round numbers. If there's 1 million shares and there's $10 million of profit, then the company is producing $10 of free cash flow a year for each share, right? And what's super duper important in looking at that value created per share for the share price is how many shares are there, right? And the company has a certain amount of shares that are the official amount of shares, right? They have the shares that are issued and outstanding, right? And so quite simply, if you were to value the share price, you would take, how much cash flow the value, or how much cash flow the company is creating, and divide it by the number of shares outstanding, of shares that people are holding, and you're going to get a share price. Okay, that's just very basic, and they call that like book value. Okay, but when you're not sure how many shares are outstanding, it creates a lot of issues. Okay, one, you don't have a lot of certainty in knowing what the fair value of one share of stock really is. Okay, and the way the stock has been behaving is suggesting that that number is not sticking to the actual numbers that are outstanding. If you look at like their 10K and look at their official filings with the SEC, it could be it could be coincidence, right? But there's a lot of circumstantial evidence to suggest that there are more shares trading hands in transactions, and the share price is being affected that way as well, than there actually are shares outstanding. Okay, there's a lot of strange metrics and strange KPIs, if you will, going on with that stock. Okay, I personally, my personal opinion, not investment advice, think the shares are grossly undervalued just based on fundamentals. Nothing to do with a short squeeze, nothing to do with speculation, nothing to do with anything like that. My personal opinion as a valuation expert, I think the shares are undervalued. So I've actually invested some in the longer term. If I could pick up some profit in the short term, great, but I've invested in AMC because I believe in it for the long term. Eventually they're going to figure this thing out with the stock. So what happened? We have a bunch of shares outstanding and a bunch of shareholders, right? We don't really understand how the stock price is moving, why it's moving a certain way, and how many synthetic shares are that are out there trading hands that aren't real shares, okay? So how do we solve that problem? I mean, we have a duty to our shareholders, right? And we want to make sure that we're protecting the shareholder value, but we can't do that if the share price is being artificially, it's behaving artificially, right? It's not behaving with the efficiency that the market should give it. That's just, that's just what kind of circumstantial evidence is showing us, right? So if I'm a CFO, I'm sitting there thinking, I have got to figure out a way to get clarity and certainty in the number of shareholders outstanding. And if there are synthetic shares out there, I'm not saying there are, okay, because that's not proven or anything, I've got to find that out and I got to get clarity on it. So what does the CFO do? Okay, they create a stock dividend. It's non-dilutive. Okay, so just know that it's not going to hurt the shareholder fundamentally. Okay, in just fundamental finance and equity tables and stuff like that, it should not hurt any of the shareholders when you give a stock dividend. It's kind of like a split. Okay. Now, what they're doing, though, is instead of just giving a common stock dividend, they're doing it with preferred stock, right? And the preferred stock is in front of common stock, right? So basically, if you are a common stock holder, not synthetic shares, real shares, okay, you have real shares, you're supposed to get a share of APE, okay, which is a preferred share. It's in front of common stock, okay, in the hierarchy of stock. All right, and how you're treated as far as a shareholder. So if you own real shares, They're giving you this ape. That's going to allow them to do a lot of things potentially for just you if you're a common stockholder right now versus the synthetic shares, okay? They could give you a dividend of $100 a share in preferred and not pay anything to the common stockholders, okay? So if you want to look up corporate governance and how all that works, that's probably beyond the scope of this. But they have singled out basically the retail investor, the common shareholder now, so that they can treat you differently and separately, right? So what has to happen now is that these broker-dealers, who they're suspicious of, or other players in the market, could be different hedge fund managers, etc. With the synthetic shares they're suspicious of, they're not going to get this dividend. Not only that, they have to deliver to you, if you're an AMC shareholder, the stock dividend. So you should get APE shares. And if you get APE shares, now if everybody gets their APE shares, then maybe there isn't a problem. Because if they're delivering the shares, okay, maybe there isn't a problem. But if there is a problem, this will expose them. And once you have those APE shares, if there is a problem with the common stock, they can now treat you differently, and they can do that legally and properly. Okay, so basically they're putting you in a better position to benefit from being an APE shareholder, gives them an option to treat you better and discriminate on your favor against the common shareholder, and at the same time they're going to expose any shenanigans that are going on, okay, with the common stock or synthetic shares. I'm not sure exactly what the game plan is. I have a real good feeling that this is one chess move. It might be 3 or 4 moves to checkmate here, but they're going to expose what's going on if there's any synthetic shares, and they're protecting their common shareholders at the same time. I just think this is a brilliant move by the CFO. This is really, really good for AMC shareholders, in my opinion. And I think we're gonna, I think any shareholder of AMC is gonna see some serious value coming out. Make sure you get your APE shares. Don't get a cash dividend or anything. Get the APE shares, okay? All right, that's it.